So welcome to this recording. This is our session recorded Tuesday, 7th of September, and the main topic was brand management in food service. Food service, of course, is always a bit of a challenge because the end consumer of the food isn't the person we're selling to. We're selling to the food service operators and obviously via distributors. So the logistics chain from manufacturer or importer through to the end consumer is complicated and it has a number of levels, and therefore your brand management is a little bit more complicated than perhaps it is in retail. But brand management has all the same characteristics in principle. It's just that the layers and the channels are a little bit more complicated or fragmented, if you like, in food service. So we do a study every year on brands in food service. And I'm just going to show a little bit about that because it does sort of lead into the discussion. And I'm not really want to talk about our report so much, but about our report measures brand performance and awareness on a number of factors. And you can put your product in that report if you wish to, and we can do it on a regular basis and so on. The challenge for you guys is what you do to improve your brand performance from one report to the next. So let's just have a look at this Brand Watch report. So we do this every year, and you simply subscribe, and you can put one or more products in there. You can put your own products, you can put a competitor's products in there. And we then measure the product performance and a rating by food service operators against all of these factors that you see here on the right. And that gives you a very good measurement of your brand's performance in the marketplace. And we survey food service operators, and we get the right statistical sampling across all of them to give relevant results, obviously. Now, I just want to show you an extract of the results for part of the report, just so you get a feeling for what it can provide. Here's, for example, in the protein grouping, this was the brand awareness of some of the key brands that participated in the protein grouping in the 2019 report. That shows you, how well recognised they are, how aware food service operators are of those particular brands.
Rodney,
Yes.
are you sharing the screen? Is it only me, or can everyone see the screen?
I think everyone can see the screen. Yep.
See the screen. Yep.
It's disappeared.
Yeah, I can see the screen.
I apologize. It's just me then.
You're pressing the
dummy.
button. And to be able to measure brands, what we do start with is a survey of the importance of all of these factors to food. So if you look across the bottom, quality of product, price value for money, customer service. These are the levels of importance that food service operators rated these factors when choosing a brand in our 2019 report. And that is fairly simple. So you see the highest one there is the quality of the product, 6.7 as was scored. This is out of 7, I believe. The lowest being specific sales promotions. So it's interesting, isn't it, that all of these promotions that distributors and so on want you to participate in, that's one of the lowest importance factors when they're choosing a brand. Price value for money is very high, and as is stock availability, as you would expect, and distribution and delivery. So they're the most important factors there across the top. And so we survey this. That gives us a stake in the ground when we then measure products against it. So let's just see now what this is. One of our clients who wanted us to say use Angel Bay Burgers was the brand. Angel Bay is the company. One of their products is Angel Bay Burgers. Sorry, Cecil, did you say something?
I was just going to say that when we've been doing these kind of brand studies here in Australia, in so many different markets in the world, and everywhere you will actually get quality of product and price value for money rating very highly. So, of course, it's a generic measurement just for those two service factors or selection criteria, particularly, so quality of product in a club is probably or can mean something differently from, say, quality of product in a QSR independent. So it's all relative in that sense, but you need to have it in there, and you can't define it, or it is self-defining in terms of the respondent. And of course, price value for money is always being rated highly, but again, it's relativities, and that's why we're doing the gap chart analysis, where which you are showing going to show now,
Yes.
because it actually takes 3 important factors and show them all in one chart.
Yeah, so this is showing, so that the black line is the importance rating, as we saw in the previous, that's that same previous thing, chart that we saw in the previous chart, sorry. So that's the black line. The red zone is the area of answers for all products in the survey.
All brands.
A brand, sorry. And the blue line is what this particular brand scored at this time.
So the shaded area is what we call the competitive range. So it's the top, the highest and lowest score given to any brand on each of those selection criteria. And what Rod is showing here now is it's a very narrow competitive range. We analyze this by different product categories, etc., not in the syndicated study, not by channel. So what Rod is showing here now is that we have seen, as we know from other studies and being in the market over the last particularly 8 to 10 years, the competitive range in the Australian food service market has narrowed significantly. So in other words, when we did this in, say, 2010, that shaded area was very much wider, i.e. the competitive range was much wider. And what is the consequence of that for your brands in the market now is that you really need to perform well on all factors to really be the chosen brand.
And of course, the brand can also be the name of your company, can't it? I mean,
yeah, you know,
there's a company brand, and then there's the products that you sell.
That's right. So supplier or brand.
So that's interesting. So that this type of measurement gives you a snapshot of your brand at a certain point in time. And we have many clients that do this every year, and they can then measure the performance of their sales and marketing activities on certain areas. You know, how do they change their pricing or their presentation or their packaging or whatever it might be, service levels. So that is quite a useful tool. And what I thought we'd do now is open up the discussion. I asked Tony to lead the discussion on...
Can I just, sorry for jumping in one more time, Rod, can you go back to that? Because why do we call it gap chart analysis? And that's, I believe, I have not seen any better analysis tool, if you like, when it comes to understanding brands in the marketplace. You can put out a whole lot of graphs, etc., but it doesn't give you that instant view. So when you see the black line, that's the importance ratings, you know. And if you take, in this particular case, price value for money, as I said earlier, price value for money will always be rated highly, but there's actually no brand in the marketplace that actually reaches expectation. So in this particular case, there is a significant gap for Angel Bay burgers and the importance ratings, which means that you are not meeting market expectations on that, exactly. And, you know, there is room for improvement. And on the other side, quality of packaging, Angel Bay burgers outperforms what the expectation is in the market. It's also important to look at this, as I've always said, there's no point in being an Olympian on a particular factor, like, for example, quality of packaging, if it isn't that important to the operators when they select a brand. So this is, so when we present this, we actually presented, where are the gaps for this particular brand? Where do they sit overall in terms of the competitive range, and what do they perform best at? So it is very key analysis, and we've had so many clients coming back and saying, yep, that's right. It could be customer service or innovation of products, etc. So, and that's why we call it the gap chart analysis. Where are the opportunities to improve your brand? So, and of course, you can then take this is a syndicated study, which really then looks at awareness, importance, and brand performance. You can, of course, then take this as a starting point, and you can do very exciting and interesting analysis in a bespoke study where you can look at conversion rates from and what are the relationships between awareness to trial to regular purchasing, etc. Just sitting here right now with such a study. So it's very private study. It's a powerful tool.
Good. Thank you, Cecil. So, if I could introduce Tony, would you like to just give us everyone information? Everyone probably may not be aware of what you're up to these days. You might want to give yourself a little bit of an introduction first, but I've asked Tony to help with the discussion on how to address some of the challenges you have managing brands in food service, and I hope that you're proactive and put forward some questions in the chat, and by all means participate in the discussion and to make it very interesting. Thank you, Tony.
Thanks, Rod. First comment I'd like to make is look at that haircut. I really, really miss going to the barber, but anyway, we'll get over that. Maybe a bit of background first. For those who don't know me, food service for 30 plus years in sales and marketing. And so marketing time at Simplot Australia, also at George Weston Foods, also Unilever Food Solutions, and then spent some time, 5 years with NAFTA Foodservice of GM Sales and Marketing. So luckily enough for me, I've spent my entire career in this space. And so, well, these questions and thoughts around, marketing in food services, all but my humble opinion, I'm interested to see whether it resonates with you guys. So I've got a list of sort of questions that I'll go through that Rod and I sort of put together, and really interesting, and no surprise, it's kind of links in with the brand study that you were talking about, Rod. So powerful. We used to use them and really powerful. I think the most important piece is that recurring year on year. You've got to see the trends. You've got to be able to see where you're at versus your competitors, and then be able to try things throughout the year to be able to bridge some gaps. And I do like the point that Cecil made about not being the Olympian in the area that really doesn't matter. I think that's a really important point, actually. Focus on the stuff that'll move the needle and get, purchase intent. So I think that's a great point. The first point that we were sort of talking about was really what are the challenges right now in the marketplace? And without stating the obvious, it's a really depressed market. And when there's not a lot of sales activity, that will lead into reduced spend, reduced resources. I know a lot of businesses who are AFAB members, some who are on this call at the moment, that are not only working from home, but on less days per week. Budgets have been slashed. So it really kind of challenges what you can and can't do in this moment. And I think also the people that you're talking to, and hopefully not your business, but the businesses that you're talking to, a lot are really in survival mode. and that's a real challenge at the moment. So I think, for me, that's pretty much the headlines from the challenges. I also added in here, though, what the opportunities were, and I think there's really one strong one is that more often than not, assuming that you're a manufacturer and you're talking to operators, generally speaking, that's kind of the sequence of events. If the operators are still employed, they've actually got a fair bit of time on their hands. So right now at the moment is not a bad time to be able to get communications out in a cost-effective manner and be able to get that out to the marketplace, because most of them are sort of listening and planning at the moment, assuming, of course, that they've got their jobs. So I think that's a little kind of upside around the opportunities at the moment. From the next question, which actually you proved, sort of beautifully, and you know what, I changed my answer on this, Rod. I really struggled with this question actually throughout my whole career, because there's pros and cons. And the question is it beneficial to have the same brand in retail and food service? And I actually wrote no, and I've scribbled it out and I've written yes. And the reason why I've, sort of chopped and changed on that, it just demonstrated again in that protein slide that you put up, Rod, Ingham's, Steggles, Primo, all of these guys have got the same brand in retail and in food service. And I think, of course, what I wrote down here in regards to sort of pros and cons, the first one was awareness. So if you've got your company's got a brand in retail, and they're generally spending a fair bit of coin to be able to promote that brand to get awareness, well, from a food service point of view, you should be able to leverage that. I think you can also leverage the work that the business does around brand strategy and also activation and innovation, assuming that these are transferable. And in some cases, they're not. And I think the other thing is just leveraging the brand equity. And then from a con perspective, which I wrote no, as I said beforehand, the audience is totally different, and the positioning of your brand and the language and the personality of that brand should be very different to what's happening in retail, or at least fine-tuned for a commercial lens. And as long as you're doing that, and as long as you're aware of that, then I think you can make it happen. And clearly, Ingham's have made that happen just from that one slide. It's a really good example. So I think that's super important. I think an example, and where I kind of came from the no, I don't think, was, my first marketing role was in Simplot. And Simplot had a strategy for frozen chips and vegetables, Edgelin Food Service and Birdseye in retail. And for me, there was none of the opportunity to leverage from that, but that also gave us, I felt, a competitive advantage up against the competitors, one being McCain. I always use the fact that we're a food service only brand. Now, Edgel was used in retail, but it was, canned vegetables are a very small brand. So there's times in which I believe it's great to have your own brand. It does require more investment, more energy. And then on the same token, if you've got the same brand in both channels, make it work for you. I think you can make it work.
So Tony, if you're a successful retail brand and then you're trying to then launch into food service, you really have to educate the food service market, because you might be a great ice cream or whatever you are in retail, but the food service players will think, well, they've only got those small packaging, or they might, it's not meant for cooking, so you really have to, I suppose, re-educate the market in food service to get traction.
Well, look, hopefully, I'd say yes and no to that, Rod. I'd say if you've got to re-educate, you probably haven't sharpened your product portfolio appropriately, because, of course, product performance is a big deal when it comes to commercial the commercial lens. As you spoke about, packaging is a big deal. So you should have that sorted. You should have the selling story sorted before you get to the marketplace. And so hopefully by leveraging the equity that you've got in retail already, hopefully it's a good brand, hopefully it's got some trust built around it, to be able to jump across to those commercial customers shouldn't be hard, as long as you've got your language right, you've got the resource behind it, and you've got all those those P's in your positioning right. So yeah. I think this next question, Rod, might have been a bit of a setup. How do you measure brand performance? Well, funnily enough, Rod just led in with that, and I just made mention here that brand health studies are super important. We've used food industry foresights in the past. I have in the business I've been involved in. I spoke about the importance of year-on-year tracking. It's okay to, look, maybe you don't need to do it every year, but if you are going to use that information to then be able to change your tactics and change your plans around what's important to get people to purchase the product, then you need to be able to see whether those changes have improved and they come through on the research. So maybe every second year is okay. It just really probably depends upon the size of the brand and how important, what sort of struggle you're in at the moment, I suppose, up against the competitors. But maybe more importantly, what are the business aspirations for that product portfolio, that brand? Do they want double-digit growth in the coming years? Well, guess what? You really need to, delve into that brand health and understand where your strengths and where your development areas are. So I think that's
we've had some clients who have a large number of products or brands.
Yeah.
Not just the company brand, but also product brands.
Yes.
And they cycle through the group. So they'll do 3 this year and another 3 next year.
There you go.
And
yep.
And that there's a continuous measurement.
Yes.
And so they're always in touch, and they're getting the feedback of what the market is doing as far as brand awareness generally.
Yes.
And then specifically on a subset of their products each year. And that's another way, because it's a bit cost effective. And the idea with this type of brand watch that we offer is, of course, the cost effectiveness, because I think it's like $4,000 for a brand, and you'll get a measurement across the entire market and all channels. And that that if you were to do that yourself as a private study, it'd be 10 times that amount.
Yeah. And that's right. And I remember also doing reports on sort of commissioning the company brand. There was a time where Simplot didn't really care whether the industry knew where those brands came from. They were sort of like, well, the brands are important, they're the products, that's what we're going to focus on. But then there was a time actually where they said, well, actually, we wouldn't mind if they knew where it came from. And so there was some work that was done around understanding where we sat and what we needed to do to elevate it. So, it's a bit of a cycle, isn't it? So the next point here that we've got, how does the brand impact distributor performance? And I would just say, the distributors are your first and biggest customers. And if you're not, if you don't think that your brand health or awareness is important to distributors, you're missing something. It was a really positive situation to be able to make sure that the distributor understands what your brand stands for, what you're going to deliver on, is super important. Of course, the operator is really important to be able to pull your product out, so they actually are requesting your product. But it's super important, and that's that sort of push and pull process that we talk about in food service. And I think if you think about the distributors, there's stakeholders within distribution groups. So you've got if you're talking about somebody like let's call out NAFTA, business I work with. So you've got the head office that you need to engage with and build awareness with your brand. you've also got the local member that's a part of that distribution group that you've then got to sort of be aware and be participating. Also, really importantly, I believe the DSRs, so the distributor sales reps, and also the telesales people, they're the closest to the operator. So if you can build your equity and awareness with those guys, it's super important to be able to do that, because of course they've got 9,000 products that they've got in the warehouse, and if somebody asks them about a recommendation on chips or on tomato paste, you want your brand to come to mind. So I would say, really
Tony,
important.
I'd just like to ask, if I could ask Mimo, I think Mimo's listening, there he is.
Yep.
Sandhurst Fine Foods has a great brand reputation, and both in retail and food service. And Mimo's done a great job over many years. So Mimo, what would you say is the most important thing to create and develop your brand in food service?
I think the main lesson we know in food service is the consistency of what we offer as a product inside the packaging. You've got to have a very consistent offer in food service. The thing is, in the food service market, you're selling to a very discerning consumer. You're selling to a chef or a QSR that needs that consistency of quality. We're lucky that in food service we get to choose a better quality spec, and in retail you have the choice of, because you can't raise prices in retail, so you then have to do one of three things in retail: to reformulate, which means make it cheaper, to resize, which means make it smaller, or to make it in another country, which all three of those are not an option in food service, because if you resize, then they know about it, because it's all about portions. So you've got an ability to build in quality in food service that you can't necessarily do in retail. In our business, we're a very simple business. When you do olives or dried tomatoes, you just try and go for the better quality. And if you've got a substandard quality, then you find something to do with that substandard quality. You can repurpose it, sell it under another brand, or find a market like pizza or something that might want that. But that's my take on it anyway.
Mm. And do you spend a lot of time or money on trade publications and marketing communications?
We used to do a lot. When we had to get the brand up and running, we spent an inordinate amount of money. It was like a race between us and Chef's Pride, for those that remember the good old days. And I make no bones about the fact that I learned a lot from Alan Plum, and he still is a great inspiration to all of us, because he really was the guy that invented food service marketing in my books anyway. So yeah, I think it's like that whole plane thing. It takes you a lot of fuel to get up there, but once you're in the air, you don't require a lot of fuel to stay in the air. So I think trade publications are good for starting brands. But I struggle to see where we're going to go with trade publications in the next 10 years. Because I love them. I love a good mag, but everything points to me to targeted online approach and doing EDMs and things like that. Which we're all coming to terms with this whole new world, and we're spending more time. Even my radio spend is getting attacked by me, because people aren't in the car anymore. They're spending more time in front of a bloody screen like I am now. We all are. So yeah, welcome to our world.
Yeah, great analogy with the airplane.
Yeah.
Thanks, Mimo.
Yeah. Welcome.
The next point that we've got down here is really talking about what the impact of private label is to brands, and it's an interesting one. I think I worked in a business that's one of two distribution businesses that has a private label range, and I think the question is, will it continue to grow? I believe it will. What's the impact from a branded perspective? I think what will happen, and I think Bid Food are sort of moving this way. They're definitely the biggest player when it comes to to private label. I think they'll sort of start to move towards category management. So that's really just about rationalising the ranges within those product categories, and you'll get to the situation where there be maybe the top two category leaders and then a private label alternative. And so I think the challenge for branded products who are either don't have the capability from a capacity perspective to be able to play in private label. Maybe strategically they don't want to play in private label, it'll be a challenge, because I suppose the manufacturers that can offer a private label product to those distributors and also have their branded product being one of the two, you can probably leverage and get some advantage out of that. But it's a constant threat. But also remember, a private label product is about really ticking off that one of the key ones, the key indicators for purchasing intent is really that sort of price value. That's what it's meant to tick. It's definitely meant to tick, consistency from a product perspective. The best approach, I suppose, for private label would be somebody like, the Aldi model, where it's meant to be as good as branded, no frills, let's call it. And that's clearly got a space in food service. But as always, a brand is about creating value. And if you can continue to build value into your brand, then you'll be able to compete against, private label all day, every day. There's always going to be somebody that wants to buy a cheaper product, that's for sure. What else do we have here? Next question was around, does a good brand attract a better price or margin? That's the whole reason we've got brands, quite frankly, isn't it? We're building brands. We're trying to build intrinsic value to be able to say, well, these are the reasons why this is the promise that we're delivering ultimately, and this is what we believe the value is. And so nobody would invest in marketing unless they were able to get a return through better price or better margin, better trading terms, better commercials, let's just call it, not even just be leverage in that private label example. So I think there's no doubt with the work that you put into brands. And I was thinking about the categories that are in food service that are sort of getting a greater return when it comes to margin, and brands are important. And you think about the two really obvious ones for me, it's kind of like wine and liquor. That's all built on brand and all built, and it's being paid for by the consumer in the food service outlet. And then you think about somebody like, I think MLA has done a great job over the years to build brands within, what could be said commodity, red meat, but be able to build a story. Quality and consistency is a massive part of that. Value, that's out the door. It's always a premium price, but people want those brands to be able to deliver. Those brands make it onto the menu, and that when people say, my product's just about ingredient, brands don't have a real strong place in food service with the chef, I'd absolutely disagree with that. I think there's a lot of opportunity to build brands in food service, and those two categories are great examples as far as I'm concerned. Just conscious of time here, Rod. I've got 3 more questions, so I'll try and rip through them. This is meant to be a little bit of gold, I suppose. So what are the top 3 must-do tips for brand managers? Took a little while thinking about that, because of course you could probably, could easily come up with 10 things that you've got to do. But if you've got to think about this top 3, from what I've learned and what I believe is really important, I think never forget about your core business. And an example that I would give of that, 2 businesses that I've worked in, the product that's got the best pricing from an operational perspective takes maybe the bulk of the overheads, but because of its volume, has probably the better margin, something like a 13 mil chip. Now, Simplot spent a lot of time focusing on, I spent a lot of time focusing on branded product. Not branded product, sorry, coated product, because that's where the market was going. So Super Crunch and Beer Battered Bad Boys and all those sorts of things that we launched. They were great. They were incremental in margin. It was really the right thing to do. But the amount of effort and energy required to launch innovation, and then what sort of scale you need to achieve before it sort of, makes an improvement on the bottom line. If you were to just spend a small amount of time on a campaign, might be new and improved, something really simple like that, on 13 mil chips, all it would take would be a 2% uptake, and the profitability, and because of the scale of that product, would deliver a massive amount to the business. And so I think understand where the bills are being paid, what are your top SKUs, and don't forget them. Make sure you're always improving them. Make sure you're always trying to find opportunities to be able to promote them when it comes to campaign usages and all those sorts of things. So I think driving the core is super important. That's number one. The next one, your job as a brand manager, as a marketer, is to be the expert in the room around the customer experience. And so make sure you're doing what you can do to be able to deep dive into that to the customer's buying journey, to be able to understand, from a food service point of view, and Mimo spoke about it before, reliability of that product turning up day in, day out, the product spec being tight, super, super important. What is it, how easy is your business to engage with and purchase products? Critically important. And the marketer is meant to be the one that understands that and is developing, the innovation and the core and all of the activations around, really being able to sort of drive that efficiency. So it's really about knowing your audience. Have a think about connecting into, if operators is what you're thinking of, and there's a particular channel or a segment within the operators that you need to connect with. There's a lot of Facebook groups that you can actually join and just understand what are they talking about, what are they interested in. A really good, easy way of sort of understanding that, and get out of the office. Christ, don't be behind the computer. Not now, that's a problem, of course, but spend time in the field. Go and spend some time with the reps and just listen and observe. And that's super important, I think. So deep dive into the customer experience. And then the last one, relatively obvious but meaningful innovation. 9 out of 10 innovation projects fail. Their business plan, whether that's a year or there should be a 3-year business plan for innovation, but some businesses don't commit that hard. So just make sure that there's a strong point of difference. Make sure that there's a need that you're satisfying. And if you're doing a me too, just make sure that it's better and more competitively priced. There's got to be a reason for being, other than, I don't know, maybe your manager saying it's a great idea, go out there and launch it. We've all been in that situation. So don't forget the core, the customer experience, and meaningful innovation is important, I think.
Tony, Mima had a question there about premiumisation.
Yeah.
And to be honest, I don't know what you mean by that, Mimo. Do you? Is that
I get what he's saying. I mean, that was probably the example I was talking about, coated chips and uncoated chips from a Simplot perspective. That's premiumisation. It's still a chip, it's coated now, and we now charge more for that product. I think retailers have been wanting and doing that for a while now, and I think that that's still happening in food service. But of course, it depends upon the right channel. Certain channels, commercial channels, might be able to take on a premiumized product because they've got a bit more margin to play with than, let's say, institutional customers. So I think that's probably the distinction I'd make. Is that reasonable, Mimo?
Yeah, look, the premiumisation thing is like organics. They use it as it's called bait. More than anything, they use it to find a consumer which is going to pay a higher price for product. And so it's a retail strategy, but I think it's got its place in food service, because if you look at coffee quality only goes one way. It only goes up. Yeah. And so then you end up with the whole premium coffee market. And then there's a rationale that if they make great coffee, then they'll make great pastries or great, savoury lunches and things like that. So the premiumisation is sending the cafe market, but I think it's just endemic into that cafe thing. And once you start raising the bar of food choices in an area, then everybody has to come and meet that quality expectation. So it is in food service, but it's got a different slant, I think, Tony. I don't know if you agree.
Yeah, agree. Yeah, absolutely agree. So the last couple of questions, and conscious of time, how do we create brand awareness? And so they've kind of got sort of 3 points to that. So I think you need to understand whether you're focusing on brand recognition or awareness. And if you think about recognition, it's really about, I suppose, recall, logo recall. So do I know that logo? That's probably it for recognition. Awareness is a little bit deeper than that, right? So awareness is about recall, but also what does the business stand for? I think about Sandhurst and I think about family. That's the next word that comes. Family business. That's the next thing that comes straight away for me, because in all of the communication, all of the copy, it's there. And so that would be a little bit of the brand awareness and what that brand stands for in food service. So that's an example. I think just touching on the point around baseline measurement, critically important. You can't, unless you know what the baseline is, unless you know what you're trying to fix. You won't. There's no use in spending time in creating awareness, because of course that could go nowhere. Basically, the couple of bullet points here around what you could do. There's referral programs. There's audience engagement. There's sponsorship at industry events. Collaboration with supporting brands. Industry associations, funnily enough, is a good place for people as well. Make sure you've got a LinkedIn profile and you've got a good comms strategy around that from a commercial B2B point of view. That's important. And I think, and I know we haven't had them for a while, but trade shows, I reckon, are just going to really jump out of the box next year. We've got a hankering for them. They're a great place to connect. It's an efficient way to connect. And I think don't forget about the trade show, that face-to-face space.
That's a good one, Tony. And we'll do just a shout out to Jerry, who's in the room from Diversified.
Yes. Yes. And condolences as well.
Jerry.
We can't wait.
Neither can we. Neither can the market, from all my conversations.
Absolutely. And I think the last comment really here, just from Narissa, she's really just talking about what channels and would you focus on for that brand awareness. You really got to go up and down the supply chain. So from a distribution point of view, you got to think about head office and local, those promotions. You got to think about the DSR and tally sales, which I spoke about. And from an operator's perspective, think about focusing on the big guys, the key accounts, socials, of course. Print media still plays a role, diminishing for sure. Trade shows, face-to-face demos, and again, sponsorships of industry important events like Proud to be a Chef or something like that. These are really good ways to be able to build awareness. And as I said, awareness has got some value around it outside of logo recall. It's really about what does it stand for, and those sort of activities will really help build over time. That's all I've got, Rod.
Brilliant. That's there's a lot of food for thought there, Tony. I thank you so much for your time. Do you want to do a quick 1-minute advert for AFAB? Super quickly, if you're at all interested joining an organisation, an industry organisation that represents the whole of the supply chain, works on industry improving projects, and is here to advocate on behalf of food service, then get onto our website. It's ozfab.org, and all of the information's there. Shoot me an email, pick up the phone. I'd love to have a chat with you and get you on board. There's a lot of work to be done to rebuild. Thanks so much. That's our time up for this time. Don't forget, we're on again next month, Wednesday the 13th. We'll hang around a bit longer if anyone has any questions or follow-ups. And don't forget to check the website. There's a free bulletin coming out again shortly. And I hope that was useful today. Thanks for joining us, folks. And hope to see you next time.
Thanks, team.
Bye.
Thanks, Jerry. Cecil, there was a question we didn't answer, and that was from, where was that question? It was about, we talked about, Virginia asked a question about, curious on your thoughts about state-based performance.
Oh, yeah.
For the most part, there's only 2 states that are affected by longer lockdowns. So I'm assuming that the reduced outlet numbers are probably in Victoria and New South Wales, are they?
Yeah, as Jennifer who did all the hard work for it and collecting the data, can testify to, there is a decline right across the states and across the different commercial channels, but the falls are sharper in New South Wales and Victoria, not because of the latest lockdown, but it is also the larger part of the market, Eastern Seaboard.
That's the big one, right? It's 40% of the turnover, basically, isn't it? Thereabouts.
Which turnover?
The food service dollar, New South Wales and Victoria, it'd have to be close to 40% of the value, wouldn't it? There, something like that.
Yeah. I mean, particularly Victoria and particularly Eastern Seaboard, really. You need to take Queensland in there. So Queensland, New South Wales, Victoria. But we saw the big falls, particularly in those states. Somebody like the Northern Territory had very much smaller declines than anywhere else in the market and so on. And that's because of the way where they're situated and how they handle lockdown. So, I mean, this is showing you exactly what lockdown did from 1st of March 2020 to end of June 2021. And of course, what I was just saying not long ago is that when we do, and when Jennifer is collecting all this data again, that's when we'll see the real impact of this second huge round of lockdowns. So, what we are predicting and what we're seeing in our research and what our interviews are coming back saying is that, you know what, it's now starting to really bite. It's exactly what we actually saw after the global financial crisis. I think I said this in a presentation earlier, Tony, that you were part of. In 2008, you had the global financial crisis happening around the world, the subprime market in the US and all of that. In terms of the food service market, it was the very upper end of the food service restaurants, fine dining restaurants, that they started to feel the pinch already in May, June 2008. It hit the market in full blow in 2009. And then both from an operator point of view and a supplier point of view, people battled through 2009, and it was in 2010 that you actually saw the hard hits, because they had managed to get through 2009 so that there was nothing to go on in 2010, etc. So, and of course, as a comparison, that's exactly what's happening right now. But I think, so that'll be interesting, but we can actually, what was interesting, and you didn't ask me that question, Rod, is in terms of, I think you actually said you 15% overall instead of 5-6% total commercial, but I can't remember. But anyway, exactly a year ago, we forecasted that in terms of permanent closures, and this is before this latest round of lockdown, permanent closures of outlets within restaurants and cafes would maximum reach 20%. That was way lower than, for example, what restaurant and catering was touting all the time, saying that we're going to lose 35 to 40% of all restaurants and cafes and caterers permanently. We said that we never agreed with that, and we said in July, August that it'll be maximum 20%, and as it turned out, that was too pessimistic, because the highest declines we saw were, for example, among independent cafes or cafes in New South Wales and Victoria. You saw an equal decline there of 14% by a state level. And, you know, many percentages hover around 10%, etc. This round of lockdown is going to take some more.
Yeah.
But we didn't even get close to 20% overall.
Yeah, it will be interesting to see where it falls out. We're not at the end of this journey yet, unfortunately.
No.
And it's almost becoming more and more unclear about how they're going to sort of reactivate things and who can and who can't. And so unfortunately, I think there's a fair bit of time to pass before we get a good understanding. And then you've got the staff issue. You know, we're talking about, you know, businesses not being able to operate 7 days a week because they just don't have the staff to be able to do that. And there's all those kind of challenges that are sort of outside of the demand. Interesting times.
No, it's interesting.
I think we've covered all the questions and we're not having any more. So I think we'll call it a day, eh?
Okay, fantastic.
Thank you, everyone.
Thanks, everybody.